Good morning, and welcome to episode 140 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, September 13th, 2023. China is engaging in a show of force in the Western Pacific with their largest naval exercise ever as a pushback and a show of strength against the U.S. Meanwhile, North Korea's leader Kim arrived by private train in Russia to discuss arms deals to help back Russia's efforts in the Ukraine. Here at home, Democrats continue to assail former President Trump with legal issues as we approach the upcoming election, and tit for tat, the Republicans are looking into impeachment proceedings for sitting President Joe Biden. Against that backdrop, CPI, or consumer price figures, are out today, and producer price inflation figures are out tomorrow. Let's take a look at the numbers and I'll give you some thoughts on inflation. Over the past week, gold is down 0.7%. It's trading this morning at $1912.80 versus $1926.10 last week. Silver's down 2.3% to $22.97 an ounce versus $23.52 last week. Platinum is down 1.8% to $909, down $17 from $926 an ounce last week. And palladium, the lone winner in the precious metals complex, it's up 3% to $1,275 an ounce versus $1,238 an ounce last week. With gold falling slower than silver over the past week, the gold-silver ratio, or number of ounces of silver it takes to buy 1 ounce of gold, has increased to 83.59 from 82.2, and the dollar has slightly flexed its muscles, still, I believe, in anemic territory at 104.80, but that's up from 104.66 last week. I just got back from a conference in Lake Tahoe with the Oxford Club, and before that, I was at Rick Rule's event, and I've been talking with clients, and I just want to make sure everybody understands. You know, we hear a lot of headline numbers, and I expect CPI will be nowhere near the astronomical inflation levels it was at last year this time. However, don't be fooled by the lower numbers. We're talking about the rate of inflation versus a year ago, right? So even though inflation numbers are down, so we're not up 10% or what have you like we were last year, we're only up 3% or so this year, understand that prices are still higher. Okay, so that 10% figure last year that was astronomical, we're 3% higher than that this year. So we'll see what the numbers tell us, but I think explains a lot. We're seeing positive confidence numbers, and I think people are confident in the economy because they see the inflation number coming down. But I'm also concerned that we see incredibly high and rising debt levels, whether it be household debt or credit card debt at the consumer level. We're seeing these numbers escalate at an alarming rate. For the third straight year, our standard of living has fallen, and people are not able, like they were able to 5-10 years ago, to tap into their homes to raise the equity they need to meet their needs, to pay their bills. Now they're turning to their credit cards at astronomical interest rates. This doesn't end well. So I think people are positive on the economy because they see the inflation levels coming down, but they're still not able to make ends meet, and consumer debt is rising. I don't think this ends well. I think this is a problem brewing, and I think it's something we should be concerned about. In the meantime, the dollar remains, quote, strong, and certainly stronger than gold at this point, with gold got wind in its sails, or wind into it, holding it back on higher price appreciation. So at this point, it's still a great time to buy some precious metals, to cryogenically freeze that purchasing power for the future, because I do see it continuing to erode. As always, we like you to go ahead and join us on YouTube, like us, send us your comments and questions, follow us on social media, receive our monthly newsletters, receive our twice weekly monthly alerts. But whatever you do, don't ever forget that getting rich starts with keeping what's yours.